Hello and good weekend to all traders. Bringing you a review of the FTSE and European markets for Monday's trading, the 23rd of February 2015. I'm assuming that everybody's glad last week's trading week basically is over, okay? Because it was all about deal or no deal. Reminds you of that program by Noel. Basically, she loves me not. She loves me, she loves me not. Basically, it's the fact that 1 minute we had a deal, next minute we didn't have a deal. Then there was arguments, counter arguments, statements, counter statements, denial. I mean, you had it all literally. And now I've tweeted out some of the articles from Bloomberg, Wall Street Journal, and Financial Times. And literally the whole argument really was all about semantics. The fact that Greece didn't want it called the Troika, which is pathetic, okay? It's the same thing. Just because you don't want it called something so that you can please your voters at home, that's not exactly going to resolve anything, is it? I understand that they have a mandate. They have to justify themselves against the individuals that have voted for them. But in essence, it's it's austerity without the name. That's basically what it is, okay? And they're being dictated to by Europe. Otherwise, like I said, the credit lines, this ELA that's been set up, basically would dry out and would come to an end, and they would have a real liquidity crunch. And given the fact that there's the latest reports are that almost 800 million euros were being withdrawn, almost per day. So I think that sort of sums it up in terms of the position that Greece was in. So basically the Europeans, or should we say Germany, had them by the jugular. I'd like to say balls, but I think that's a bit rude, so I'd say jugular, okay? And literally they were being dictated to. And if you look at the latest article that I've tweeted via on Bloomberg, and if you look at the actual breakdown, so hit scoreboard, here's what each side got in the Greece negotiations. I mean, just read through it and it makes you laugh. The Eurogroup gets to keep European Union, European Central Bank and IMF, i.e. we all know is called the Troika, oversight of the programme extension. Greece gets to have everyone not call it the Troika anymore. So it's the same thing, just don't call it the Troika, so that our voters back home are happy, and so we can declare that we've won. How pathetic is that? Okay, hence the reason why there was arguments about a letter being sent, obviously a letter not being sent, or the wrong letter being sent, and then there was denials, and then there was obviously acceptance, etc., etc. So it was all about semantics. The next bullet point: Eurogroup has Greece's agreement on an extension of the existing bailout program. Greece has Eurogroup agreement not to call it a program anymore. Wow. Okay, is that why the markets had been gyrating all week, just because you didn't want to call it a program anymore? How pathetic is that? So you didn't want to call it the Troika, you don't want to call it the program. Okay, so again, it's all about semantics. The Eurogroup gives Greece until Monday to come up with a set of budgetary measures that will allow a successful review of the program. Oops, we're not allowed to say that, by the way, folks. Extension now. Don't you dare say program. Okay, don't you dare say Troika. These right idiots. It's like being at kindergarten. Greece gets to pick its own austerity. Okay, it's like pick a mix. You know, when I was a child, we'd go to Woolworths and there'd be a pick a mix store. So we can choose what we want to do there. Obviously, in terms of the sweets that we like, etc. Obviously, we're not running a country here, are we? I mean, we don't have to balance the budget, do we? I mean, the Greeks don't have to pay tax, whilst everybody else in Europe does. That's wonder what everybody else has to say about that. Okay, anyway, and eventually it may get flexibility in reducing its primary budget surplus. Again, this is debatable. I mean, you could just see the amount of disagreement that's going to arise from that. Okay, so pick its own austerity. Wow. Okay, so there's no longer a fiscal union. Okay, again, that comes into a question. So if you are going to be in the European Union and you're going to have one fiscal union, one monetary union, then again, this is going to open up a Pandora's box from my perspective. Okay, so this is not looking good. Okay, this is, again, like I said, it's a kick the can down the road. Let's ignore it. Let's keep the markets calm and collective before the next Next chaos resumes, or next round of chaos resumes. Okay, so again, that's going to open up a can of worms. Okay, the Eurogroup gets to ring fence the EFSF, which is good. Obviously, they don't want the polluted money from Greece, obviously distorting it. So it's available only for bank recapitalisation. Now this is very interesting. So only the banks obviously get access to this, not the government. Okay. So it's available for bank recovery at the discretion of the ECB. Greece gets to watch this happen. Fantastic. Wow. They get to observe that happening. I mean, okay. So obviously get some popcorn ready, Greece, and watch it on your new HD TV based on the money that the Europeans have given you. Okay. And it's interesting that money itself obviously comes from the tax that Europeans pay, not the tax that the Greeks pay. Just a matter of time before they get kicked out of Europe, from my perspective. Anyway, the Eurogroup gets to have a quiet weekend. Fantastic. So we can all relax now, and it's a 4-month extension. So basically, they're on review. It's not a 6-month extension. So given the fact that there was a quote stating that Mr. Tsipras said, or was it Mr. Varoufakis, that we'd meet them 1/5 of the way. Okay, 1/5 of the way. Interesting. Okay, so 6 months, 1/5 isn't exactly 4 months, is it? Okay, so seems to this is interesting, very interesting. Anyway, okay, so the Eurogroup gets to have a quiet weekend, so everybody relax. Short squeeze. That's exactly what ensued late Friday. Not sure why the market short squeeze. Really, I mean, this isn't exactly some sort of a resolution. That's why I went short around 8:30, 9 p.m. and I shorted the Eurostoxx and shorted the FTSE because it's a froth. Okay, it's just a short squeeze rally, has no base. Greece gets to work really hard on a set of measures that the oops, I almost said it then. Apologies, I almost said it then. I was just about to mention Troika. Not allowed to say that, by the way. Bogeyman, don't ever say that. Okay. Institutions must approve by Monday evening. So again, I mean, you can just think of the disagreement there. Eurogroup gets to have a quiet weekend. Obviously, they can all rest up. They've been tired now, working Monday to Friday, and they start basically going at each other again on Monday. Okay. Greece gets to work really hard on a set of measures. Greece working hard. If Greece had worked hard, they wouldn't be in this in this position. Given the fact that nobody's paying the tax and they're on the verge of bankruptcy and bank runs. Okay, so measures that the Troika institutions must approve on Monday evening. So again, some further measures needs to be approved. And again, we all know what happens when Europeans need to approve something or come to some sort of conclusion. So this is going to be very, very interesting. Okay, so as the details come out, as the arguments get put forth from the Greek side and they get rejected by the German side, we're back to square one. Okay, back to square one. This is going to be very interesting. Okay, so like I said, I'm short, and I'll explain my reasoning, which I already have, I think, from a sarcastic point of view, by reading these 5 points. Okay, so basically it's just kicking the can down the road. There's a very good article for those of you that are interested with regards to the fundamentals in terms of the euro and why the euro obviously didn't rally. This is by Kathy Leon. I think it's a very good read for you, for everyone from a fundamental perspective. I'll go through it, and I certainly obviously adhere to this view. Based on Euro USD's performance today, investors were not excited or impressed by the Eurogroup's decision, obviously, to provide Greece with a 4-month bailout extension. It's pathetic, really. I mean, 4 months. So basically, they're on some sort of observation period. The lackluster reaction has to do with the fact that the details have not been hashed out, which I've already explained. Okay, again, they'll be bickering and fighting again on Monday, leaving room for another breakdown in the debt deal negotiations, which we already know. Hence the reason why the Germans are very clever, and they've gone for the 4 months. So basically, they're on a probation period, and then basically when they do kick the Greeks out, then nobody can say anything in terms of attempting or goodwill on their behalf, okay, or questioning them as to why they've kicked them out. However, Greece Friday, Greece asked for a 6-month extension, and Eurogroup granted a 4-month reprieve, which, like I said, I've already touched upon. However, Greece would need to provide a list of bailout conditions on Monday. Again, this is going to be, as we all know, whenever Greece puts something forward, it gets rejected. When the list is submitted, the Troika will decide by Tuesday morning if it is sufficiently comprehensive to use a starting point for reforms, and if it is, then procedures will be taken towards a broader agreement. Agreement? I don't think anything's going to be agreed on Monday or Tuesday. And again, there'll be lots of anonymous sources. Ben Sherman, is it Ben Sherman or Uncle Ben sources? Sorry, Uncle Ben sources. Yeah, obviously, possibly HP source. Interesting. Okay, so when the list is submitted, the Troika will decide. So again, we'll see. Oh, by the way, sorry, I said Troika. Apologies. I shouldn't have said Troika. I'm not allowed to say Troika anymore. Okay, we have long been optimistic that an extension will be made, and we still believe that both parties will reach an agreement to restrictive Greek debt, avoiding a Grexit. But we, along with the broader market, are not happy that this can obviously be kicked down the road. There's still plenty of room for another screaming match, which I've already explained will start Monday. So obviously get your popcorn ready and certainly start observing. Celebrity death match, I think it'll be. Schäuble versus Varoufakis. Today's announcement fails to eliminate the risk of a Grexit, and more immediately, Greek headlines will continue to affect how the euro, the major currencies, trade in the coming week. So back to news flow again, folks. So basically expect volatility. Considering the significance that Greece has for the entire Eurozone, which we already know, it should receive greater focus than Janet Yellen's semi-annual testimony on the economy and monetary policy. So Greece is a smokescreen for that, so watch out for that. That's going to be very interesting. Okay. In all likelihood, the Fed chairman will dance around the question. So another dancer. Mr. Varoufakis is a dancer, and obviously we have another one now. So it'll be dancing on ice. Maybe they can pair up together. You never know. Okay. So in all likelihood, the Fed will obviously chairman will dance, keep the market guessing basically about the timing of a rate hike. So again, get your guesses in, folks, and obviously start logging into Paddy Power and put your bets in. Meanwhile, it still appears that Germany would be okay with a Grexit, which I've already explained. This 4-month basically probation period is just a justification because they know the Greeks are not going to adhere to the actual fiscal union or the basically the want to basically become independent. They don't want to adhere to austerity, which the Germans are very strict upon because they have a budget surplus, so it is in their favour. And if they undermine the Eurozone project, because there was talk about an empire and so on and so forth this week, so if they undermine any of that, they'll get the boot. Okay. In all likelihood, the Fed chairman obviously straight with billions of euros flowing out of Greece in the past 2 days, which I've already stated, 800 million euros a day, which is pretty ridiculous. There's a significant amount of urgency for Greece to provide a satisfactory list of reforms, which I don't think they're capable of, folks. Euro-USD traders are waiting for the final approval early next week before taking the currency pair up to 1.15. I think we're currently below 1.14, and I'm actually short the euro as well, so that's something that I'm going to look at from a swing trading perspective, although I forgot to update, which I will hopefully on Monday, and send that trade out as well. Okay, so that's basically the situation that we find ourselves in. Basically, the Euro group, or the EU, the Greece and EU saga will continue. The love letters that they write to each other will continue, and there will be uncertainty, there will be fear, and that basically will dictate and dominate proceedings come Monday. Okay, and add in the fact that you have talk with regards to a potential rate hike timing with regards to Yellen. Again, that's going to be very interesting as well. Okay, I think Miss Yellen will attempt to mask or hide the dovish stance of the minutes, and she'll try and talk of a rate hike without obviously attempting to spook the market intentionally, but it will be done. Okay, so given the fact that you have a rate hike talk from the US, that should keep the dollar bid, and obviously given the fact that the ongoing saga and the uncertainty from Europe keep the euro selling off. Now obviously the only way that will go the opposite way is if Miss Yellen maintains her dovish stance, and in her minutes, her speech is very dovish as well, although I can't see that happening because she undermines her own credibility. Okay, and obviously we do get some sort of resolution, concrete resolution, and the Troika approves and confirms which I can't see that happening either. Okay, so that's my perspective. So what happens next week? My bias from the outset would certainly be bearish. That's what I'd expect. We all know the QE put is there, and obviously that's causing the markets to stay afloat, and that's one of the reasons why the ECB did QE, because they obviously knew this was coming, and basically gives them a hedge. Not only does it give them a hedge, it basically creates more short squeezes, because everybody obviously wants to buy and front run this QE. Any sell-off in the markets obviously is triggered, or triggers more short squeezes, or even if the bears attempt to even gain some sort of foothold, they get squeezed out and the markets move to new highs, as we see in terms of price action late Friday, when the DAX went to 11,100, etc., etc. Okay, let's look at the technical side of the picture now. I think I've given you an insight into the fundamentals with regards to Europe, and that will dictate the FTSE as well to a large extent. Now the FTSE itself will be moved mainly by oil. Now, as we can see here, oil certainly is obviously holding resistance, so again that must be respected. Now on a 10-minute chart basis, the reason why I shorted the FTSE late is because the oil price still remains weak, as you can see here. Even with the Greek deal, oil price is moving lower. Even with QE, obviously from Europe, markets remaining lower, and even with a dovish Fed FOMC minutes, the oil price is heading lower, and that's primarily due to the supply and demand. Okay, so the excess supply and the reserves, etc., that were basically confirmed. Okay, so it's very, very important to keep an eye on oil. Only until oil makes a base and starts to move higher, which at the moment, based on fundamentals, is very hard, only then will you actually see the FTSE itself move and break to new highs, from my perspective. Okay, but at the moment, the high on Friday night wasn't justified, because what was the basis? An extension by 4 months, or a probation for Euro for 4 months, and then you're back to square one again. And again, nothing's been confirmed until the Troika actually approves the program on Tuesday or Monday. Then maybe you have a fundamental argument for the markets to be justified moving higher. Until then, very hard. Too much uncertainty from my perspective. Okay, right, and especially given the fact that oil is obviously lower as well. Okay, folks, so let's start looking at the technical picture now. So let's start with the FTSE 100 daily chart. You have a rising contracting wedge pattern that again generally indicates negative bearish price action. If, like I said, if we do break out and confirm above this rising contracting wedge, so the FTSE goes to say 7,000, then I respect that, and you have to respect price action, and we are in the bullish phase, or bullish territory, where the markets continue to short squeeze high, and that has to be respected, so don't fight the trend. That's basically my interpretation. Okay, the 60-minute chart, we had a H&S formation, which obviously, as you know, failed, so therefore you had a short squeeze, and that's what you had late Friday. Everybody was trying to play this trade. Obviously, once we broke out above the 6,920 after hours, we all know thin market liquidity, etc., manipulation, so on and so forth. They can rip the market as high as they want. It's irrelevant to them. Okay, that's basically how they make the money. So that's how we understand. So I need to see cash market close above the 6,920, and in order to obviously maintain a bullish posture. Okay, but for now, regardless of what the futures are trading at, we'll see exactly where the market opens come Monday. Okay, that's the FTSE 100. Now the FTSE 250 and 350, one could argue, maintains the bullishness. So as you can see here, we're moving higher, so therefore one can argue you are bullish. The FTSE 352, one could argue there you are bullish. But like I said, my concern is the fact that oil prices are not confirming that move higher. So therefore, it leaves the door open for a potential fake out. So if I just bring up the FTSE 350, if I can find that somewhere. 1 second. There we go, that's the FTSE 350. So again, same pattern on the FTSE 350, upper body or upper channel resistance, rising contracting wedge. Again, that's generally not a bullish pattern, it's a bearish pattern, so that certainly needs to be observed as well. The other factor as well, which I found very interesting, is that the FTSE volatility index has been making a base. As you can see here, it's holding at 13.5 level, and it isn't exactly progressing any lower. And like I said, it certainly has put in a bottoming tail here, and certainly seems to be wanting to make a base in this region, as we can see here. Okay, so again, given the fact that you've got a rising contracting wedge, you've got a a falling contracting potential wedge pattern here as well. So this is quite interesting. So if I just show you this here, and then this certainly argues for a potential breakout higher. So that's something that we're going to be observing as well. So with regards to the FTSE 100. Now let's have a look at the rest of the European stocks. Okay, European stocks, let's have a look. Okay, so FTSE All Share, by the way, certainly is looking very strong. One could argue that certainly is very, very bullish, and certainly wants to continue. So that's something that we have to pay respect to. And again, I want to see some sort of move higher on the FTSE 100 in order for me to obviously maintain a bullish bias on the markets. Okay, so let's go to the European markets now. So from a charting perspective, okay, so from a charting perspective, let's have a look. Okay, let's start my daily chart on the CAC. Okay, the CAC itself, we put in a potential bearish candle there. As you can see here, the market sold off. Obviously, we came to a rescue towards the end, so more of a hanging man type candle. And again, a 4-month extension doesn't exactly do it for me, as I've explained from a fundamental perspective. Those of you that know your TA, you know it's a hanging man, therefore potential weak candle. Okay, 60-minute chart, as we all know, there was a potential there for a HNS formation as we broke out this rising contracting wedge pattern. You had this left shoulder here, you had the head here, then we were looking for a right shoulder and obviously a break lower. But given the fact that the European market's short squeezed higher, that's certainly come into question now. Okay, with regards to the French CAC and the actual resistance, especially given the fact that it has an unfilled gap below and resistance remains at 4840. If obviously we break above 4840, has to be respected, and we obviously short squeeze higher, and then we'll see exactly where this market takes us. But bear in mind, you do have this diagonal trend line that's interesting in terms of resistance. So again, we'll test and see exactly where it's positioned. I know the current futures on the CAC are currently trading around the 4860, 4870 level, but that's irrelevant for me because that's after hours. I want to see that in market cash hours, and we'll see exactly whether or not that level is going to hold. If it does hold, like I said, then you have resistance around the 4880 and upper channel resistance, and we'll see exactly how the market fares from there. Now, for all we know, the market could open up, say, at 4820, 4810, even down to 4760, based on negative headlines over the weekend. It's basically, see, it matters where the market opens, not where the market is currently at. Okay, 10-minute chart, we obviously move lower, and let me just draw this trend line again. So we have a gap level there, and we were respecting this trend line here. Okay, so I was expecting this trend line at 4830 to hold. Obviously that fails to hold, and we have this resistance. We have this resistance here at the 4840 level. So 4830, 4840 will be resistance. Now I just need to highlight the fact that we have this unfilled gap at 4750. So that itself, from a fundamental perspective, one could argue we could have quite a substantial sell-off to close that gap, based on the fact that Troika, even though the Greeks don't want to call that anymore, or the program, on the program, basically is it certainly needs to be sanctioned and authorized, and again, that could create a big problem. Okay, so that's something that will certainly be taken into consideration as well from the CAC's perspective. An unfilled gap below isn't exactly a bullish signal for the equity market, so that gap must close, and then we need a fundamental catalyst, and that's the only fundamental catalyst I could think of at this very juncture. Okay, next one is the German DAX. Let's have a look at the DAX and see exactly what that's telling us. Okay, so if I start with the daily chart, we were attempting to hold this resistance level here, but the German DAX did close above, so we have to respect it from that perspective. Ignore this for now, and we certainly seem to be moving higher on the daily chart, so very, very bullish, especially with the volume rise as well. Okay, 60-minute chart, we did put in a topping tail. So from my perspective, looking at this chart at this very juncture, what I would like to see from the German DAX is a close above that topping tail, so 11,080. Yes, I'm fully aware the German DAX on the futures is currently trading at 11,120. That's irrelevant. Again, I need cash market confirmation. Okay, so and this candle here, can you see the volume that we had? on this candle. That generally signifies a topping tail with good volume, generally signifies a short-term reversal. Okay, I'm not going to call the top of the market because nobody can, but we can certainly call reversals in the market. Okay, so a potential reversal. Now, if the market closes above that candle, this is a cash, by the way, not futures. Okay, so or after hours, so 11,080. If we have a close above that, then I'd certainly argue for a bullish move, and the market continues to move higher. So this is basically what I'm looking for, a potential rising contracting wedge pattern, and the market reverses and sells off in the opposite direction. Alright, going on to a 10-minute chart of the German DAX now. Okay, just draw this trend line in here. Okay, so obviously that's been respected, and we were looking for a potential H&S formation initially, given the fact that the Germans obviously given their position, etc., etc., and talk of no agreement being made, and so on and so forth, and then obviously that was going to send the German DAX lower, and that obviously that wasn't the case because we short squeezed higher. So for now, all I'll say is this: is that it's all about that. Let's draw this trend line here. Okay, so it's all about the that wick at 11,080. Given the fact that we still have argument here for a potential H&S, I mean, provided we're below the 75%, so your 75% is exactly 11,050. So if we hold 11,050, okay, going into Monday's trading session and start to head lower, then the H&S is still obviously active. If we don't, and the market gold clock moves and pushes a higher than 11,080 and sustains itself, then I'll be in the bullish camp. Okay. But this 4-month extension is not good news from my understanding. This is just kicking the can down the road, and nothing has been resolved, leaving the debate to continue Monday and Tuesday. So this is not a good sign, not a good sign. Okay, so this is the German DAX, so you're aware of the pattern there. The Eurostoxx I always observe as well, so let's look at the Eurostoxx daily chart. Okay, so daily chart again, hanging man candle, not exactly continuation. Okay, look at a 60-minute chart. Again, you had this rising contracting wedge. We had the argument for a potential H&S. Your left shoulder was there, you had your head in already, potential triple top, right shoulder, and down we go. That obviously hasn't transpired. So for now, we just have to stick with the fact that we have this resistance zone here at 3,495. If the market moves higher than that, then respect to the bulls must be given, and the market obviously we must adhere to potentially I will have a bias change, and we must shift our understanding and obviously go for a movement on the upside. That's basically what I'll be doing. That's what I am. I'm a day trader. This week I was negative, positive, negative, positive, and ended up with plus 34 points for the week. So it was a very tricky week for me from a currency perspective, a lot of whipsaws from an equity market perspective. 1 minute you had a deal, next minute you didn't have a deal. So individual who incorporates fundamentals and into market analysis, it can be quite tricky, but that's the market for you. Okay, and this is one of the hardest weeks and toughest weeks to trade, and I still ended up with plus 34 from that perspective. I think that from my own personal trading perspective, and just from a general perspective, I still think that's good given the crazy and insane whipsaws and moves of markets, and especially the amount of bias changes last week were just ridiculous. Okay, just based on some sort of news flow, and all the news flow, these sources were all anonymous, so it just makes you think who's putting out these anonymous sources to obviously gain financially. Okay, so that's the situation that we find ourselves in with regards to Eurostoxx, so watch out for that level. Again, you need to close above 3,495, then obviously I'll switch my bias to the bullish side. Okie dokie. Right, so that's the FTSE 100 and the European stocks more or less covered. Now the only other factor I'd like to discuss here obviously is the Euro USD. Now the Euro USD, start from a daily chart. You have this potential bear flag scenario here where we're just consolidating within this red candle here, and the market looks like it wants to move lower based on that. Then you have the 4-hour chart. We had the inverted head and shoulders formation, which more or less is dead for now. That's all I would like to say. I mean, technical perspective is certainly dead. Whether or not obviously we move higher based on this making a higher low. That's basically what it's all about now, and the pivot low being 1.1278. So we just work off that. Okay, so the 60-minute chart, and obviously Yellen will be very interesting as well as to what she has to say with regards to her interpretation of the markets at present, and whether or not she maintains a hawkish stance, which I think she has to, and maintain her credibility. Okay, right, the euro itself obviously spiked to 1.142, obviously reversed to 1.1380 region now, and we're looking for further downside. One would argue, based on the uncertainty and fear, and so on and so forth, given the fact that it's only a 4-month extension, not the 6 months, and again they're on a probationary period, and given the fact that they are anti-austerity, that certainly doesn't bode well for the Germans. Okay, so that's the situation you find yourself in there. Okay, on the 60-minute chart on the Euro USD. 10-minute chart, you can clearly see here we've got a H&S formation forming now. You've got your double top obviously in, you've got your left shoulder there, you've got your head, intraday double top, looking for a right shoulder, and obviously potentially moving lower again. So down pop more than likely back down to the 1.13 level. Okay, so certainly bearish from that perspective. Again, it's yet to be seen how the markets interpret the euro come Monday, especially the Asian markets come Sunday, and the markets will obviously adjust accordingly. The US dollar obviously will be important. It seems to be making a base in the 10-minute chart, as you can see here now. It's had its move lower, given the fact that Miss Yellen's testimony is on the verge of being announced next week. Obviously she'll be talking in terms of the markets, so therefore you're looking at an inverted head and shoulders formation. There's your head, okay, which has been put in, and looking for a potential right shoulder here, and then obviously the market's moving higher. So, and then given the fact that you have an unfilled gap up here, as you can see on your 60-minute chart, that certainly needs to close, and obviously that will send the euro lower as well, and commodities go lower, hence the reason why the price of oil isn't being given the ability to move higher. So very debatable there, folks, very, very debatable. Okay, I think that's a wrap from my perspective. As always, risk on, risk off, wax on, wax off. Goodbye now.